Ladies and gentlemen, welcome back to the channel. Here in this video, we're going to talk my thoughts on Tesla into, again, the end of this year, into 2026. Look at this clip. It's titled, Tesla's proposed pay package is foolish and reckless, but shareholders' problem, says Yale's Sonnenfeld. You know, this guy, what a shitty investor. This guy, he should definitely stick to academics because, wow, that's a take. So we're going to listen to this and react to it. But again, Tesla stock has to double from here for Elon to get paid anything. Minimum. That's not like big payday relative. That's a minimum payday for you to double your money. Like, I think this highlights just how polarizing Elon and Tesla as an individual and a company are. A lot of people just don't like Elon or just don't like Tesla for one reason or another that, you know, we'll criticize for no reason. Okay. And the fact of the matter is, with this compensation package, it is paving the way for massive upside in Tesla stock. And we'll discuss that as well in just a moment. But take a listen to this clip. It's crazy that, like, people even have jobs when they think this kind of way. Take a listen.
Jeffrey Sonnenfeld, the Senior Associate Dean for Leadership Studies at Yale University School of Management, CNBC contributor, and, dare I say, a prolific writer who has, let's be honest, you've got some opinions about Elon Musk, Jeff. What do you take about this?
Well, you introduced it before the break as hot takes, so I won't disappoint you. I'll make it so hot that I'll direct all the hate mail that comes in your way.
Thank you.
But I will say that if the Tesla board really wanted a bargain, I think I would, and maybe even you as a media star would still take it for $500 billion.
Oh, I can be had for a lot less. I just want to be very clear on that. I mean, now, I don't know, Jeff, if the 423 million shares, if that's existing stock, because then you got to get it from somewhere, or if it's new issues, maybe you do. Because if it's new issues, then we got to get into this issue of dilution, because and Tesla, by the way, and I've called it one of the most important stocks in the world, not because I'm advocating for the company, Jeff, but just because they have so many shares outstanding and it's tied to so many different options. There's a stock market implication here, too.
Yeah, there is. There's an ancient area of securities law that you will remember from your dusty old law school days. I only took one course in it, but I pretend that I knew more on TV about waste and compensation. The term waste, you may remember, with Duke was held to those standards, and Duke Energy or Duke cigarettes, actually tobacco, and they lost it because they paid their CEO too much. We saw the big thing that took place with Musk recently at Delaware courts and the relocation to charter themselves in Texas. I don't see there's a role for the government, for courts in this. I think it's foolish. I think it's reckless. I think it shows illusional and delusional qualities of the board. But this is the shareholders' problem. If they want to sell, they should sell. People who are shorting the stock, obviously, a lot of the shorts haven't done well. It's an issue of timing. But this is the biggest meme stock we've ever seen. Even at its peak, Amazon was nowhere near this level. The PE on this, well above 200, is just crazy. When you've got stocks like Nvidia that are the price earnings ratio is around 25 or 30, and Apple is where they around maybe 35, 36. Yeah. Microsoft around the same. I mean, this is way out of line to be 220 PE. It's crazy, and they've, I think, put a little too much emphasis on the magic wand of Musk.
Let me ask it a different way, because you're a professor of management, okay? And I've never met Mr. Musk. I'd love to sit down and interview him. Elon, if you're out there anytime, let's do it. We're going to show some of the companies he's created. And whatever you think of Elon Musk, I think, Jeff, you would agree with this. There's no doubt that he's got a vision that not a lot of people have had in American or global business history. The Boring Company, Neuralink, Twitter, SpaceX, Tesla. But is any human being worth $1 trillion in compensation?
No, I mean, we never saw Steve Jobs, what do you have, 11% of Apple, Bernie Marcus of the Home Depot, Thomas Edison is Bill Gates. I mean, this is crazy that you didn't need an incentive. What if he were to leave? Who's going to get hurt? If the stock fell by 50%, he'd lose $100 billion. If his threats were serious, the board should call his bluff. If bets were serious, he'd be the biggest loser. That'd be crazy. And how could his life be all that different? His lifestyle. It's all a question of ego, not incentives. But you look at those companies. Yeah, he is a brilliant guy. I don't think we'll ever know, and I don't know him, by the way, anybody smarter than Elon Musk and more entrepreneurial. It's extraordinary. But you look at those companies. Where's Twitter? How much has it fallen?
Is it Rockefellerian? Can I make that into is that a verb?
Yeah, Rockefellerian still didn't this kind of stranglehold. And the performance across Rockefeller's portfolio was better. Solar City was a failing company that got absorbed. Twitter X, of course, is a disaster under him. The Boring Company, you have to give him truth in advertising, lives up to its name. Where are these 26 cities he's supposed to lash together with these tunnels? They're supposed to be completed 7 years ago. Neuralink, everybody's got their nerve bragging about Neuralink. These things were way overstated and inflated. It's the tech bros do love to pump up the value of this stock because of his name, a supposed magic wand. But wherever you look around the world, we're seeing the stocks are down 20, 30, 50, 60% in various countries. And the person they attribute the falling stock to is him. The question is, how soon can they incent him to leave, not to stay, and to develop a good succession plan? There are lots of people who could step in and take this fantastic company the next stage. But, even in China, BYD now is a third of the market. He once had almost a third of the market. He's down to only 4% in China. And the rest of Europe, he's plummeting in Europe, whereas BYD is dominating him in Europe. It's extraordinary. The Chinese company BYD sold some 13,000 vehicles last month. It's up like about 230%. Musk fell 40%. There isn't a part of the world where Tesla is not falling under Musk. So this magic wand is way overstated. Again, he's brilliant, but it's time, for every Bill Gates to move on. And it's time maybe to see a succession developed here. And there are some other brilliant tech titans out there. Well, it doesn't cost $1 trillion. I just can't believe he would leave, by the way. Again, he'd be the biggest loser.
What a hater, bro. That guy, has clearly something against Elon Musk. And I think that highlights something that we see a lot in the institutional world today that I believe is going to start to change and evolve now that the new compensation package is out. And not once did that Yale individual reference Optimus or robotaxis. They talk about BYD, which in fact will fail one day. We made videos on why BYD will fail one day, but it comes down to debt. It comes down to how they operate their business. BYD only works when they're growing a lot because they are taking delivery of goods from, companies, what steering wheel or brakes or whatever it is, and they're paying for the orders that they got 3, 4, 5 shipments ago, right? They're not paying in real time like a Tesla would do or a U.S. company. It's a model that's destined to fail. It's like a pyramid scheme, right? We've made videos on BYD and their ultimate failure on this channel before. The fact that this individual doesn't mention any of the reason why Tesla is trading at a 200 times PE highlights the problem with Wall Street and why they don't understand Tesla. Tesla is the largest real-world AI company in existence today. There is no other company doing things creating products and services like Tesla in real world AI. And now that the compensation package is out and we're seeing the lofty goals that the management team is striving for, it's really going to put Tesla on the map, okay? As I said at the onset of this video, Tesla stock has to double for Elon to get paid anything. Whether there's a little bit of dilution there or not, doesn't really matter if Tesla stock needs to double, right? If Tesla stock needs to go up 850% for Elon to hit the max tranches in the compensation package, why is this guy over here complaining about that? The only reason you would complain about that is if you were a super liberal not invested in Tesla stock, right? That's what that sounds like to me. Okay, if you're invested in Tesla, if you are an active participant in markets, that is exciting for you. This is the most, by definition, shareholder-friendly compensation package we have ever seen in the history of markets. It rivals 2018's, but I would say this is even a little bit better because the operational milestones are so lofty that if Elon really wants to get paid almost $1 trillion from this compensation package, the stock is probably going to be like a $15 to $20 trillion company. They would need 4x NVIDIA's adjusted EBITDA, roughly trading around NVIDIA's multiple. I mean, that could put Tesla 4 times higher than NVIDIA. That's a $16 trillion market cap, right? Just to put some basic numbers on this. So it's actually a lot better even for shareholders than you might think, just because the max high on the market cap tranche is $8.5 trillion. It's the stock would be a lot higher than that if Elon gets paid out fully over the next 10 years. Now, from a Wall Street perspective, I do think this opens the door for a lot more investment into Tesla, right? Because Wall Street was not looking at Tesla as an AI company, and they're really forced to do so now. I think Tesla is morphing into the next phase of their business, where the autos are going to be a lot less important in the market cap or performance tranches. Okay, there's only one that even has to do with autos, and that is Tesla selling 20 million vehicles. Okay, it almost has nothing to do with the auto business in and of themselves. Like, Tesla's not going to hit these performance milestones via the auto business. So I think Wall Street is really forced to take the AI view of Tesla. And if you do take the AI view of Tesla being successful in robotaxi, being successful in Optimus, the value of Tesla stock today is significantly underappreciated. Again, just for Elon to get paid on the first tranche, Tesla stock has to double from here to be around a $640 stock. You guys got to keep in mind, a lot of retail investors want these 10x returns, these 50x returns, 100%, 100x returns. I understand that. If you guys want those kind of opportunities, come check out the link down below in the description of this video for the trading community. That is what we're targeting, right? Outsized returns. We're looking at small cap AI stocks, But Wall Street, they look at things more of like a risk management perspective, right? They want to just beat the S&P. They just want to keep their jobs by beating the S&P, or at least trying to beat the S&P. Tesla and their compensation package, even to get to the highest tier, would, over 10 years, just to double in 10 years, would match the S&P. Anything above that exceeds the S&P's historical performance. Right? If Tesla doubles 10% return a year over the next 10 years, that's in line with the average S&P 500 return forever, around 10%. Anything higher than that is alpha. Okay. And the odds that Tesla does very well in the coming years, I think have went up via the compensation package. Again, from that perspective, from a psychological perspective, but also from a perspective of you now have Elon as an active force working for Tesla, right? I said this before the compensation package was announced a while back, a couple months ago, that Elon has zero incentive to do anything positive for Tesla, say anything positive about Tesla. He has no incentive to not get involved in politics. Like, why does he care? He doesn't have a compensation package. The courts shut it down anyways. Okay. Now, Elon has apparently gave some assurances to the board that he's not going to be involved in politics. Like, Elon can be one of the biggest driving factors of creating value for Tesla stock. And what's fascinating is we're about to be heading into an environment where interest rates are coming down as soon as next week. And markets are pricing 3 times by December 10th. Okay, the last Fed meeting of this year. And then many more rate cuts in 2026. We're going to have an environment where inflation is falling into the end of this year and 2026, in my view. We're going to have a situation where the economy improves. Maybe the labor market starts to improve as well. And AI is front and center. All of these things uniformly benefit Tesla more than most companies. Now you have Elon Musk back locked in. You have a compensation package with some astronomical goals, or, hopefully achieved goals. And you're set up in a very positive way for Tesla stock. And I think the next 3 months are going to be quite parabolic. As I've said before on this channel, I think Tesla could be a $500 stock to end up, to round out this year around December 31st. That would be about a 42% return from here. And I think next year, things get even crazier. Tesla could be a $1,000 stock next year if they execute in actually selling Optimus commercially by next year, as they have stated that was their goal. And if they can continue to deploy the robotaxi network in a large way, you're looking at some pretty substantial upside returns. And the way I view Tesla, and the reason I like Tesla so much versus other stocks, there's other stocks out there that are going to do well, okay? But the big reason why I like Tesla is I view the probability of Tesla, being successful in the compensation package, going up 10x or more is very high. Like, if I had one stock to invest all my money in for the rest of my life, it would be Tesla. Because other companies, sure, can they do very well? Of course. But the odds of failure are a lot higher. A lot higher. Magnitudes higher. Okay? Whereas Tesla, I view the odds of success as very, very high. And I think Wall Street's whole perception of Tesla is at the cusp of changing. So let me know your thoughts on this down below in the comment section. Let me know your thoughts on the Yale professor here. Do you think it's, do you agree with the compensation package? Like, is it a good thing? Is it a bad thing? Is it a little too much? Let me know your thoughts down below in the comment section. Again, if you guys want to come join the trading community, check out that link down below in the description of this video. We are up 97% year to date in the portfolio. It's not a recommendation. It's not financial advice. You may lose all of your money. Again, do not blindly copy trades that anyone makes. That's just always going to be a losing strategy if you are doing that. So do not do that, please. Contact a financial advisor and come get involved with the group if you'd like to. This is a once-in-a-lifetime opportunity. Check out that link down below in the description of this video. Message me on Patreon. If you have any issues, make sure to connect your Discord on Patreon, or the links will not work. That is one thing I get asked by most people that join is, how do I actually join the link? How do I make the links work? You gotta connect your Discord on Patreon. Go to your Patreon, go to settings, link your Discord. It takes like 10 seconds. So have a great rest of your day. Go Lions, and I will see you in the next one.